Perfect. Welcome everyone to another simulation session here, and also welcome new members who came in. This seems like a little bit of a university. Like when new people come to university, like, oh, what's going on over here? Anyway, so we're gonna start with we're gonna start with the random date first, random date generator, and then we're gonna continue on at this point. Let's see here. So we got random date, and then maybe to do online toss. Let's do an online toss over flip a coin. Right? We're gonna flip a coin. What's gonna be? Okay. So if it's tails, it's pound yen. If it's heads, it's gold. Right? If it's heads, it's gold. So we're gonna flip it now. Heads and gold. Okay. Oh, gold. Okay, perfect. Hey, I was fair. You know. All right. So, Sunday's dates, we're going to look at 2021 for the past, let's do for the past year, over here, and then till where we are basically now. We're going to get 25 random dates. All right. So, this is the dates we got. We got September, October, November, December, January, February, March, April, May, June, July, August. Let's do 22nd October. 22nd October. That works. Going once, going twice, going thrice. Perfect. 22nd October. New simulation. And from here, we're going to choose gold. From here, we're going to choose the date. October 20. Oh, hold on. What's going on over here? 22nd October. 22nd October is not here. Anyway, we'll do 17th October. First time making it to a live simulator session. Hey, looks like the shift at KFC. Welcome, KFC manager. All right, fixed spread around 15 pips. History on the chart. History on the chart. We're going to see around 350 days. And yeah, I guess yeah, we're good over here. 17th October. So let's do this. So we're going to add. The time frames here slowly. Add the daily, 4 hour, 1 hour, 30-minute. Do we need the 15-minute? I think for reference, we're gonna bring the 15-minute just for reference, right? We're not gonna look at the 15-minute a whole lot. It's just gonna be for basically reference. Nice. So at the bottom, we got everything. Oh, we got odd cap. Okay. 15, 30, 1 hour daily, 4 hour daily, weekly. Perfect. So we're going to start by looking at the PreLondon, right? So if we're looking at this time right here, this is 100 hours. If you translate that to the Eastern time zone, how do I know? Because I've been doing simulator session for so long that I've just memorized all this now. This is 6 p.m. Eastern. 1000 hours here is 3 a.m. Eastern, right? So we got to start at 1 a.m. Eastern, 2 hours before London Open. So that's going to be 800 hours right here. So we're going to switch over to the 800 hours. We're going to next bar, 6, 7, 8. This is 1 a.m. Eastern. So the whole context about this simulation session is going to be taking trades while looking for inter-session moves that start from pre-London and then they continue on into pre-New York based on the 1 hour and maybe the 30-minute time frame, right? So that's basically going to be the entire context of this simulation session here. So first of all, we're going to take a look at the weekly. Weekly is basically like rejection right here. That's it. That's the only analysis you need to know on the weekly. I mean, this can go up, fill the wick, or this can go down, or it can just range, whatever, right? And if you measure this range, it's like a 200 pip range. That's all we need to know. Nothing really, we're taking trades based on the weekly. Now, looking at the daily time frame, now the daily tells us some more information, right? What daily tells us is, okay, so let me just bring these up over here. Charts, no, insert, hold on, view charts, view, we need line studies, perfect. Awesome. So first of all, daily we have a resistance. Second of all, daily we have a support. And the previous daily candle closed like a very, very strong bearish candle, which may mean that this new daily candle can continue pushing down towards, 1751. That's the first sort of analysis we can see based off of the daily. If the daily candle rejects some sort of a minor support on the 4 hour or the 1 hour, if it's there, then there's a probability it can probably go up. Who knows? Let's consult the small time frames to even try to substantiate those ideas. Now, looking at the 4 hour time frame, it's very clear we have a support right here, right? We have a support, 4 hour candle closed, which means we have a resistance. Now, the basic idea is now only based off of the 4 hour. If we break above 1772, there's a high probability price can continue up, fill this wick to the left hand side, which is 43 pips away. That could be a very, very good trade based off of the London and or maybe New York. If we break above this wick, then we can probably continue pushing up till 1786. So these are sort of like anticipations you're making as you're coming on to the session and you're looking at price action that okay, if we break resistance, where can price go? We're not talking about candles or the way they form or breakout impulse entry. We're not talking about that. We're just doing simple anticipated price movement, right? If we break below support or if we break below these wicks on the 4 hour, then maybe price can continue down to this support here to the left hand side, which is like almost like 50 pips away. So we're probably going to mark that down as a support as well. And now we're going to take a look at the smaller time frames, the 1 hour time frame to see basically what's going on. Okay, looking at the 1 hour time frame, this is what we got right here now. We have a support forming on the 1 hour right here, very crystal clear. We have a resistance here on the 1 hour time frame. And if we break above this resistance 1772, the next resistance is basically 30, almost like 30-ish pips away. Let's clone this over to the 30-minute time frame and see what we got on the 30-minute. On the 30-minute, we sort of have that same idea. Maybe want to bring this down here in the 30-minute here as well. So if we do break below the support on the 30-minute time frame, there's a very good probability the price can continue pushing down into this rejection area, which is like 50 pips away. So let's zoom in here a little bit. And right now, currently, we are basically in a range between 1771 and 1776. So if you measure this range, this is like a 63 pip range, right? And essentially we are creating a minor support, a minor resistance here as well on the 30-minute time frame. And if you do break above this area, now we got to measure the range. How big is this range? This is almost like 27, 25 pips over here. So probably a pretty good idea would be to wait for price to break above either 1772 or break below 1764. If we find some other like some other trade or whatever, then probably we're gonna start to execute on that as well. But for now, I guess we're just gonna wait to see how price forms into London session. Even looking at the 1 hour time frame here, we're just kind of like waiting. So the time has started. This is pre-London, basically 1 hour before London Open. 2 hours before London Open, sorry. So yeah, just waiting. Waiting for a signal. There's also one important thing that happens is following zones, right? Following zones. Following zones is also very, very important. And that's, I mean, if the opportunity comes, we're going to talk about that as well. Following zones, how to follow zones. Like, okay, so a big example is right here, right? Let's say we didn't have this price action to the left hand side, this one, and we had this resistance right here. Price moved up, created a new resistance. So now basically you move this area up over here. You're like, okay, this is our new recent resistance now. So probably gonna look at this as resistance. So we're going to be talking about following zones here as well a little bit. If the opportunity comes. Like right now, we're just in this range, looking at 30-minute time frame as well. We're breaking above this high, but the reason why not taking a buy over here because this range is like 20 pips, not enough range. So yeah, we don't know. Just gotta wait. The 30-minute candle is about to close. There we go. 30-minute candle has closed. Looking at this 30-minute candle, looks like a nice area to take a buy, but the range is not that big. It's like a 20 pip range. The range is not that big. So that's the only reason why. And it's totally fine. Even if price moves up, and it fills this range, like 16, 17, 18 pips, it should be perfectly okay. Like if you're someone you're saying that, okay, you know what, I'm going to sit back and I'm not going to execute on this because there's not enough range. And I do know if price goes up, I'm not going to be affected by it, then that's perfectly fine because you're patiently waiting for maybe for price to break above 70.72 or probably break below 70.65 or whatever the sort of price action is formed at that point. Overall trend, however, here I can see on the 4 hour is down because we came down, we're kind of consolidating, so it would make sense for it to go down here as well. So I don't know, we'll see. Oh, look at that. We broke the high, now we're kind of like retracing over here on the 30-minute time frame. All right, let's move it a little bit faster over here. Oh, we're breaking the low here now, looking at the 1 hour time frame. Okay. Slowly, we're also coming into high volume time. Now we're going to be 1 hour before London Open in about 15 simulation minutes here. It's going to be high volume time at this point. Coming up, coming up. All right. 4 minutes, 3, 2, and 1. There we go. 30-minute is creating I would say it's ranging, but we're coming into a high volume time, right? So whenever you come into like pre-London, London Open, these are times when ranges are broken, when zones are broken, stuff like that. Um, Someone may ask why, because there's a lot of volume at that point. That's the biggest reason why. And also looking at the 4 hour time frame, this 4 hour candle is also trying to flip bearish. The only one concern I have is basically this resistance being formed on the 1 hour time frame. You can see that even though the candle closed a minor bearish candle, it still closed bearish in a downtrend. So we had one candle come down, this candle created a bullish candle for a little bit of retracement or whatever, and then we had the candle closing bearish here. So if this new candle, pre-London candle, can break the lower here to the left hand side, we got almost 29, 30 pips over here for price to fill this wick if volume drives price down. Now, the only thing is, whenever price is in this sort of like a ranging environment, when you're walking into a high volume session, the biggest issue is that, oh, should I trust that there's going to be enough volume to push price? And while you're waiting to execute or whatever, you miss that trade. But the only thing here is going to be for price to break the low, it has to make a top wick first for it to go down, especially looking at the 4 hour. 4 hours, trying to go bearish. If you remember, we talked about the daily as well, right? That for daily, previous daily was bearish. This one could also break the low to continue down. Now we have that sort of like confirmation on the smaller time frames. Number one on the 4 hour, that the 4 hour is trying to turn bearish here. 1 hour, we had a big rejection to the top side. And on the 30 minute, where this 30 minute is a volatile candle because it broke the high and broke the low, but still closed pretty bearish at this point. So the condition is going to be wait for price to make a top wick, break this low, then take an impulse sell and anticipate it for price to go down. If it goes down, awesome. If it starts to range, then whatever. What can we do? Oh, okay, hold on. Slow it down a little bit so we don't miss it. See, it's going up. It's starting to. Oh, okay, let's slow it down here a little bit more. It's moving way too fast. There's no buying opportunity, selling opportunity. Once it's breaking the low right here, this is the point where you're taking an impulse entry. Well, where I'm going to take an impulse entry right here. So probably going to do with percentage. It's going to be like maybe 1%. Visual mode, take a sell. Stop is going to be above this wick, around 12 pips. 13 pips is better because if price does come up, then there's spread. And maybe we're going to take a look at price to continue pushing down to 1765 because there's enough volume at this time since this is pre-London or London Open. And looking to the left 4 hour, yeah, that makes sense for price to go all the way down over here. On the daily, oh, that's just the daily low. So we're going to remove take profit because we're going to try to leave a runner run all the way down towards 1759 on the daily. Now, how are we going to manage risk in this position, right? So first we got to wait for the 15-minute candle to close. Now, from this point onwards, if this candle retraces and comes up to form bullish, that's the point I'm going to be closing 50%. If it not closes, but if it starts to flip bullish, that's somewhat like a new rule that I've been following like for the past 2-3 weeks. So right now we're about 6 pips, 7 pips over here, 3 pips, 4 pips. Let's speed it up here a little bit. Oh, nice. Now we're really pushing down over here. See the volume in pre-London. Look at the time right here. London Open is in 1 hour over here, right? Let's take a look on the 4 hour. 4 hours also down. 1 hour time frame, obviously 30-minute. We followed that candle coming straight down towards this sort of like support area right here. Now, since we're coming down to support area, sometimes you could say, oh, like, what, there's volume in London session, so it may continue to push price down. But when there's a huge rejection, I don't know, like it's a very, very huge rejection right here. So this is going to be a very good, important part to maybe secure some or most of it and let the rest run if it continues to break down and then goes down over here. Because this is a huge rejection right here. Because this candle was also very bearish at one time. This candle was also very, very bearish. Oh, I guess we broke more down over here. So we don't know how this candle is going to close, basically. So if you can see right here, in the first 8 minutes, price just dropped with a lot of volume. Oh, wow, look at that. 50 pips over here on the runner. Yeah, it dropped a lot. Let's take a look on the daily. Daily also dropped. See that whole what's the word? Visualizing that you're looking at the daily, you're like, okay, what can make it go up? What can make it go down? Right? And for the daily candle to go down, it had to flip bearish to go down, right? Perfect, no problem. Then we needed confirmations on the smaller time frames. 4 hour candle plus time of volume. Then 1 hour candle. We adjusted the range, candle closed like this. Trend was bearish. We're like, okay, take a sell. We got wicks to the left hand side. It may work out. Looking at the 30-minute time frame, I mean, so we put all pieces together. And then we executed the trade in the hopes of winning the trade. And yeah, it basically ran very, very well. Ran more than I expected it to run, to be honest. I was maybe thinking we may reject this area right here. All right, let's speed it up here a little bit. Let's wait for the candle to close. Whenever you're taking a trade, you're waiting for the candle to close all the time. So right now, just going to wait for this candle to close, right? If you've missed the trade, let's say sometimes you miss a trade, you're like, oh, I'm going to get the retracement. Sometimes it can work, but you see gold, right? Gold sometimes just continues pushing. So even if you want to take a retracement, always aim to look for a retracement based on the 30-minute or the 1 hour time frame, right? If let's say price is moving up and you want to take a sell from a very, very, very strong uptrend, you have to wait for at least a support, no, at least a resistance formed either on the 30-minute time frame or on the 1 hour time frame. 1 hour is better because there's a high probability and stronger confirmation time frame. 30-minute is still good, but in strong trends, it could be very risky. Okay, so this is the London. Um, wow, look at that. So this is the London Open now, and it seems like we're creating a sort of like a zone right here as well. So I guess it's going to be better to maybe wait for New York session because already taking a trade in London, pre-London. I mean, the way price is formed now, if this candle breaks the low, there's a high probability for it to continue down. But that's only like 17, 18, 19 pips away. So I guess it's going to be better to just wait. Just wait for pre-New York. Oh yeah, look at that. We're breaking the low to maybe fill this wick. But this is a rejection right here as well. This is a rejection, plus you have rejection to the left-hand side. Also, you got to understand, one session will give a very nice one move. Not two moves, one move. Either that move's going to continue. Oh, look at that. Just retrace. Either that move's going to continue moving, or it's going to move in the beginning, and then it's going to start to range till the next session. So if you look at what news we have for later on, no news. We have no news here for later on. Yeah, it looks like the 30-minute is just trying to range over here now. Let's see how this candle closes. Oh, ranging. Yeah, we're ranging now. And now we're slowly moving into pre-New York. So let's take a look on the 1 hour time frame. Yeah. Slowly we're moving into pre-New York now. So we'll have to wait. We'll have to wait here. Because essentially we're just trying to maybe do a retest at this point to move further down, but then we have these rejections here as well at the bottom. These rejections right here. Because we got to break below this wick to continue pushing further down. Oh, I guess we did broke below this wick. Let's take a look on the 30-minute. Oh, yes, look at that. This is a perfect, perfect, perfect idea for sells, right? If this 30-minute, it's making the top wick, same thing happened right here. We're making a top wick. We broke the low. What happened? We continued to push down. This one right here, it's making a top wick. It breaks the low right here. We'll take a sell, and then we can continue to push down. Perfect. Perfect. Two in a row. We're going to get two beautiful wins in a row. Just got to wait for it to break the low. We'll break the low, and then we'll take a sell. Just like the same opportunity. The reason why I don't want to take a sell now is because I think that's going to be a hasty sell. A hasty sell means that didn't want to wait. And as the candle, oh, wow, look at that. It's just retracing over here. It's like 15 minutes left for the candle to close, and damn, it's not doing what we thought it would do. It's just retracing. Oh, it saved us some anxiety over here. Even though we broke below, we didn't break this low over here, this candle. Wow. Saved by the bell. There we go. This is the new 4-hour candle starting now, right? Awesome. Where do you guys think the 4-hour candle is going to go now? Probably down, right here. But we need confirmations on a small time frame. Looking at the 1 hour time frame, we need this candle to break below the low. Looking at the 30-minute time frame, we need some bearish confirmations here. So again, we're waiting. We gotta wait some more for price to create some sort of bearish confirmations. Let's speed it up here a little bit. Can we take dynamic entry? No. No. Those ideas are for experienced traders, dynamic entries. All right. So this is the new 30-minute candle. We're also coming into a high volume time now. So since it's breaking the low right here, as you can see, it's breaking the low. I would think this is going to be a really good opportunity to enter a sell and anticipate price to move down, but the support is like 7 pips away. So it's not that big of a range to take a sell in. Yeah, so I think it's going to be a little tough. This candle is also about to close. I think the close of this candle will give us a better opportunity maybe. There we go. The candle has closed. Wow, this is basically where you can say that, okay, there's a high probability for price to wick up, break its own low, and continue pushing down. Because we're coming into a high volume time, pre-London time, and pre-London has lots of volume. So maybe right here, we can take a sell, or once it breaks the low, I guess once it breaks the low, yeah, right here. Right here, we can take a sell, visual mode. Stop loss is going to be like what, 20 pips? We're aiming for price to continue pushing down till here. Right? Perfect. All right. 7 pips, 4 pips. Oh, retracing. Let's take a look at the smaller time frames here. What's going on? Looking at the 15-minute. Oh, look at that. Look at this 15-minute. Now, I guess it needs to reject this area and continue breaking its own low. But the reason why I'm looking at the 15-minute now is to manage risk. Okay, so look, the 15-minute candle, closed bullish, right? Which means that 30-minute candle closed with a little bit of a rejection here. And the reason why I say rejection is because this wick is bigger than the body. So this is a rejection here. 15-minute candle closed bullish. So this is the point to manage risk. We're going to close 50% right here. Right? We close 15%. Also, I forgot to mention that this 15-minute candle, it also broke the high of the previous candle that closed bullish. So we're going to manage risk here again. So that's my rule, right? I got late on this first one because essentially the first 50% goes off of the entry when the 15-minute candle closed bullish. Second, went off of the entry when the next one broke the high of the previous 15-minute candle, which signals that maybe once we're making these higher lows and making higher highs, there's a possibility that price may not go down. You know, there may be some hope in your heart that would say, oh no, it will still go down. We got to hold it. Don't hold the whole thing. Hold like a small part of it. So right now what we're holding a small part of the trade. Just a small part. So look, 1 hour candle closed with a rejection. Looking at the 30-minute candle closed bullish. When the 30-minute candle closed bullish right here, this means we've created support. So 30-minute is a strong support. So what are we going to do? We're going to close the trade and we're going to be like, okay, you know what? Accept our mistake. Probably this wasn't a continuation, and oh wow, look at that, right? So we managed risk. So we took 2 trades so far, and those 2 trades were of sort of like the same um, total value, right? On one trade, we won this much, and the second one we lost this much, 21, 11, 10. Can you clarify the point? where you close the trade, yeah, the 30-minute candle closed bullish, so we created support. So that's why we closed the trade, because we were in a sell. If anyone's new here in this simulation, and if some things don't seem too clear to you, I think the best thing would be to go through the database and go through the unlearn and relearn section of the database, because that's going to bring you up to speed to everything that we do right now. That's going to help a lot going through the database. So yeah, so we're moving into New York Open now. So I'm also gonna start to move into, like, our next London session here as well. So, oh, look at that. Look at this right here. Look at this right here. This is a trade I took maybe 2 months ago. This was a buy at New York Open. Basically, we've closed bullish right here, and this is a really good example. I think if it works, it's going to be a really, really good example. We came down in a London session, right? We came up to a rejection area to the left hand side. And now the 1 hour candle has closed a very healthy bullish candle, a very strong, healthy candle that works out, exercises, has a lot of power, decent power, if not a lot, and it's NY open when there's a lot of volume in the market. So just by looking at this, what's the first thing that comes to your mind about the direction of price? What's the very first thing that comes to your mind? Shouldn't take you guys that long to type. Come on. Bullish, right? Up. Perfect. Now, when you're thinking about bullish, let's say we're not going to execute on this, right? When you're thinking about bullish, where do you think the stop is going to be? And well, obviously the stop is going to be below this 1 hour candle. But like, since if sometimes like, you're going to say, oh, I'm going to wait for this candle to break above the high right here to go up. Or maybe I could enter right here and use something what KFC manager said about dynamic entries and enter a buy right here, stops right here, and keep on adding positions. Maybe this could work, right? So maybe this is the first time you're looking at this and you're visualizing this to go up. Now if you look on the 30-minute time frame, it's ranging, right? So we're just going to move one candle forward and we're just going to see what happens. Okay, perfect, right? That worked. So maybe if you see this again, maybe the next time or 4 more times or 5 more times, you start to realize that, oh, okay, I've seen the same scenario 4 or 5 times at high volume time. So maybe this works more often than it doesn't work. Is it not better to wait for a retracement than sell? Yeah, that too. But Leon, we were only talking about this specific example right here, because most times the move from the London session is corrected in New York session. Yeah, so we're just talking about this specific example right here. So let's move on to the next one now. All right, so this is the next pre-London session here. Let's take a look on the 4 hour time frame, and looks like we are pushing bullish. Looking at the daily. Oh wow, look at that. Daily has basically rejected that area. So it seems like there's a high probability for price to continue to push up, right? 4 hour as well, we're pushing up. This is the new 4 hour candle about to form. And once this 4 hour candle forms, there's a high probability for it to continue to push up. Perfect. Like, bullish. Looking at the 1 hour time frame, 1 hour is basically forming a resistance right here, and we're forming a bearish candle, which means there's an opportunity for price to retrace, and that retracement could be the 4 hour making a lower wick, right? So I want you guys to really understand that. 1 hour is creating resistance to retrace, right? Retrace, create support, and then we can take a buy to go up. Or if price breaks above this high, we can take a buy to go up. But if it retraces to create support, that retracement for support could be the 4 hour candle making a lower wick and then taking a buy to go up, right? Looking at the 30-minute, let's adjust the zone here in the 30-minute here as well. Actually, it's going to be better to maybe clone from the 1 hour to the 30-minute. Yeah, right there. This is what we got. This is what we got. So If we retrace, create support, we can go up, or if we break above this high, 1775, then there's a high probability for price to continue pushing up towards this area, 1782, whatever there is, but we got some pretty decent range over there. So yeah, so I guess we're gonna let it play out. We got a plan, and we got to move with the plan, like a robot, like a programmed robot. That's all we got to do. Like a programmed robot, we have to follow the plan. Now look at this. 1 hour is breaking the low. Oh, yeah, we're basically breaking the low right here. Let's speed it up here a little bit. Oh, nice. Look at that. We're gonna form a support over here probably. The 30-minute candle is about to close. 30-minute candle closing in 3, 2, 1. 30-minute candle has closed. Looking at the new 30-minute candle, we are all right. Maybe this could be a support based on a 30-minute, right? Maybe. Oh, what's going on over here? We're breaking up over here. 1 hour candle has broken the low. If we break the high, this is pre-London at this time. So I think there could be a very good possibility for a continuation. Looking at this, we're retracing. Okay, good. We should reject that area as that's the rejection. But if we break above that high right there, I think this could very well continue to push up. This is where an impulse entry could go in for price to maybe push up till 1780. I think till 1780 would be a great idea. Clean candles to the left, 4 hour time frame as well. We're breaking above the high on the 4 hour. It's pre-London, high volume time. Clean candles to the left hand side. Daily is bullish. I mean, so many things pointing towards buys over here. So it's going to be a sin not to execute any buys. We're going to execute a buy over here. Now, the stop is going to be okay. So generally, if we're coming out of a range, I'm not going to place my stop right here below this candle, which is like around 21 pips. I'm probably going to keep it around within this range because if we're breaking above in the high volume time and all time frames are pointing bullish, I'm going to put the stop within this range, not in the middle of it, not in 3/4 or something like that, just using my intuition and place it within the range because the whole idea is that if price does break above this high in high volume time and all things are pointing bullish, there's no reason for this candle to continue back in the range. If it continues back in the range, then it's just making a top wick here to do like whatever. So that's one of the reasons why placing the stops right where I am right now. Let's remove this and yeah, that's it. This candle is about to close. Oh, look at that. We're moving over here, pushing. 13 pips, 14 pips. I think 1780 or even 1781, 1782 would be a great idea. We're coming down now. We're retracing. Now, this is where you trust the volume in London session and you let candles play out. You just got to let them play out. There's clean candles and you just let them go. You just manage risk, right? If price comes below the entry, maybe a little bit, could be a fake out. How can it be a fake out if it's not a fake out? So please refrain from using terms as could be a fake out. How do we know it could be a fake out? It has to be a fake out for us to say it's a fake out. This is why people don't execute on trades because sometimes guys see prices moving up, but then this thinking comes in their mind, oh, it could be a fake out, so I'm not going to execute on this. And the trade plays out, you're like, oh man, oh, it wasn't a fake out. A fake out is when candle closes back in the range. That's a fake out. All this doubt, we have to get rid of this doubt. Oh, could be a fake out, could be a false move, could retrace back in the range, So that's one thing you have to really, really make sense. So now from okay, so if this candle comes below the entry in drawdown, then we're going to close 50% because we went in profits for about 18, 19 pips. We're expecting price to continue pushing up to 1781. But if we continue back below this entry, then there's some sort of a probability that it may continue back in the range. So we're going to manage risk at that point. So yeah, just watching at this point now. Let candles play out during high volume. Tend to close as soon as it retraces. Yeah, when you get afraid because the candle is retracing, just close 80%. 80%. Just close. So see now, new candle has formed. So this is where we can basically adjust our stop and bring it to break even. And once it's at break even, just be like, oh, I seen this guy Raja just let his trades play out in London session. I got nothing to lose. I'm just gonna let it play out. And you just sit back, you do your laundry, do your dishes, eat whatever you want to do, and just let it play out till maybe 6 a.m. Eastern, pre-New York time, because you also got a clean candles here to the left hand side. And only focus on the 1 hour candles. That's it. That's all you got to focus on, the 1 hour candle. So we skip to the next candle. We let this candle close. Boom. We closed bullish. Looking at the 30-minute. Look at this. This is London Open here now as well, right? London Open. You move on to the next candle. Next candle like this. This is 1 hour after London Open, right? 1 hour after London Open at this point right here. Looking at the 4 hour, it moved up. Daily here, you got the weekly here. We're trying to move up over here as well. But when you're looking at the smaller time frames, you're looking to see that we're coming up to some sort of a rejection area here to the left hand side. Even though you have clean candles on the 4 hour and the 1 hour, but looking at the 30-minute, we're coming up to where price kind of ranged here before. So you're keeping that in mind, because we broke above a zone, and the more price leaves the zone, the further away price moves from a zone, there's a high probability it's going to retrace towards that zone or even retrace like 50%. Do you agree gold has better moves in London or New York? It has good moves in both sessions, both of them, whichever you may trade. I've just been recently trading London till New York, like letting it run for the past maybe like 6 months, 7 months. So probably gonna close everything right here because we're coming up to a rejection area, so it doesn't make sense to hold the trade. I mean, if we retrace, then we lose some money over there. We lose some of the profits. But if it continues to move up, then whatever, for the sake of the simulation here. Right. So that one trade risking 1% got us about 4%. So yeah. Oh, look at that. We're moving up over here further along. Let's move on to the next bar. Move on to the next bar over here. Oh, we're rejecting now slowly. Yeah, the 30-minute is rejecting now. Beautiful. Let's see how this new 30-minute candle closes. Oh, we're closing bearish here. Someone would have taken a sell over here for price to move down. Yeah. So yeah, basically now we're retracing. We probably want to create a support and then continue to move right back up. This candle is closing like this, a rejection from 1778, 1777. So now we have to wait for either this candle to break above to break above this high to go up, or to create a support. If we can create a support, then we can confidently take a buy for price to continue pushing up. Let's see how this candle closes on the 30-minute time frame. Oh, look at that. See how the candles are closing? We had a smaller body, bigger body, then the bodies start to get smaller. Now this body got even smaller, which means that if the new candle wicks down and breaks this high, then there's a high probability for price to continue pushing up. And we can continue to push up. But this range is like, 20, 21 pips. It's not enough range. Oh, look at that. Maybe take a test entry right here. Let's take like 0.2%, 0.2%. Stops right here, maybe, 1 to 1. Just like a test as retracing. If someone wants to take like, dynamic entry right here, you take a buy, put stops below this area and anticipate because the candle bodies are smaller. Oh, we're coming further down. So the whole idea about dynamic entries is that the previous low basically shouldn't be broken. That's the whole idea. This test entry, yeah, that's it. Okay. That was fun. You know, now this is the one which will go up because it's a new hour now. Oh, wow. Oh, damn. Okay, let's move on to the next one. Yeah, oof. Crazy. Was there news? There was no news. Anyway, so that was a little brain fart. So see how easily you can get into that over trading phase. You see candles move and close a certain way. You're like, okay, this one has to work. This one has to work. So that was a close call right there. So now we're gonna be a good boy and we're gonna move on towards the next one. All right, pre-London right here. Looking at pre-London right here now. Let's remove all these zones. From the daily time frame. Oh, daily is just right there. So daily candle closed bullish with a rejection. This new daily candle could potentially move up, but also the body of this daily candle is smaller as well. So we are not too sure how to approach this, basically. Let's take a look on the 4 hour time frame. So 4 hour is obviously bullish. The new 4 hour candle is starting, so it makes sense for this 4 hour candle to wick down and then continue to push up. If we can get that, beautiful. Looking at the 1 hour time frame, 1 hour is basically we are, yeah, bullish would make sense, since the 4 hour is also bullish. So I would hope the 1 hour candle can break this high and then continue to push up. I think that's going to be a very, very good move. We have almost like, 35, 36 pip range here to the left hand side. Looking at the 30-minute time frame, 30-minute also makes sense. We're creating a support and we're moving into a high volume time, pre-London, which has a lot of volume, high volume actually, for the matter over there. So yeah, I think this could be a very, very good opportunity for price to move up. So yeah, let's just wait. So we're gonna wait for price to maybe wick down on the 30-minute, break this high or this high, and then continue to go up. Yep. Oh, wow. It's twitching basically. We gotta wait. Oh, looks like we missed it. We missed that entry. It moved too fast. Look at that 1 hour time frame over there as well. 1 hour time frame moved way too fast. So I guess we'll have to wait now. We have to wait for it to retrace a little bit so that we can get a better entry. Because taking an entry right here would be very, very difficult. Yeah, right here, I think would make sense if it comes down a little bit more. We gotta. Oh, interesting. What kind of maneuver is that on the 1 hour time frame? 30-minute time frame here as well. That's some crazy maneuver over there. Good thing we were late. Yeah, let's just wait for this 30-minute candle to close, man. Wow, look at that. Interesting. 4 hours still bullish, 1 hour still bullish, 30-minute, 15-minute. Damn. Now, this is where we may need to consult the 15-minute time frame, right? Because the 30-minute has this big old wick right here, 6 pips away, and the 15-minute has this, it also has that same idea over there. Yeah, so I was thinking if the 15-minute breaks the high, that could be an opportunity for price to move up once we break above that high. Wow, I didn't like the way the 30-minute did that whole maneuver over there. So I guess we'll have to wait. We're still in pre-London stage. Slowly we're coming up. We're about to break this high right here. Right here. Almost. So I think this is going to be the point. Also, the 15-minute candle is closing. There we go. This is our situation. Stop is going to be below this candle. Not that bad. 11, 12 pip stop. And looking at price to continue on till maybe 1776, 1775. I think that's going to be a very, very good idea right there. Right? Makes sense. Pre-London, lots of volume, clean candle to the left hand side. The same kind of trade we had yesterday. Um, yeah, perfect. What was I doing over there? Yeah, just take profit in case we win a lot of money. Okay, awesome. Look at that, straight profit, same idea. Oh, nice. Look at that move. 13, 14, 15, 16 pips. Just pushing like a rocket over there now. Very nice. The candle's also about to close in about 10 minutes. Beautiful. We're coming close to 1777, 1778. Yeah, that rejection area there, 1778 area, we're slowly coming up to that. We're moving into pre-London here as well, which is going to provide more volume, some extra push for price to move up. So I guess that's going to be helpful. Some extra push towards 1778. Can we push? Yeah, so we're just going to wait over here. 1778 looks like a pretty strong rejection area. You can see where price consolidated here before. So yeah, it's going to be a pretty good area to maybe secure some of these winnings that we're accumulating. When you're taking a trade on 30-minute, will you see if the previous 1 hour candle closed bullish or bearish? Yes. Yep. Yeah, we will. Because essentially, majority of the time frames have to close in your favor. Majority of them. Oh, wow, look at that. We're coming up towards this rejection area. I would let it run, but we're coming up to a rejection area. So, yeah, you got to be a little bit careful here. So let's close about 70%, secure that, bring our stops up a little bit, and yeah, just let the rest run. Let's move on to the next candle. Oh, damn, look at that rejection. Let's move on to the next one. And this is London Open now. And London Open should provide us some more volume here for price to continue to push up. London Open. Oh, we got stopped out over here. Yeah, this should continue to move up once we break above this high. We have a strong rejection. You can maybe, pump up the risk right here. Move stops below, like, this area where we have a lot of volume and just, yes, very easy trade at this point. High volume, London Open, lots of rejection. We had volume in pre-London. This is London Open now. So yeah, there's a very good, great probability for it to continue to push up. If it breaks its own low, then we can probably close some percentage of the position, but it's not breaking its own low at this point. So yeah, so we're just going to risk some of the profits we made in the first 2 days and try to make some more profits off of that. A little bit of a healthy compounding. See, now we're moving pretty nicely here. We're coming up towards 1779, also another rejection area of about 17 pips. Maybe close 90%, put stops at break even, and that's it. 10% now. Let this candle run into pre-New York. This is pre-New York time now, right? Pre-New York time, we are in right now. 30-minute candles consolidating. This is also ranging at this point. So yeah, just gonna basically wait for some sort of a support to form on the 30-minute now, because we're just kind of like consolidating here now. We got a range over here. We got another, oh, I guess we're breaking above or not. Rejection here. Yeah, nothing. Oh, was there news? There was no news, but the runner is still running at this point about 60, 66 pips. Oh wow, my God, look at that. 4-hour candle just continued running over here. We broke above the high. Daily is filling the wick at that point. 1-hour candle just did a lift off here. Wouldn't have had that if we didn't have a runner. 100 pips. Close this little trade over there. Oh, straight rejection. All right, let's move on to the next one. 800 hours, 3, 4, 5, 6, 7, 8. 800 hours pre-London once again. So in this entire simulation so far, all that we've been talking about is waiting for candle to break the high at pre-London volume. That's it. And have clean range to the left hand side. That's all what we've talked about so far. Do you trade your GJ pre-London pre-New York move exactly the same as gold? Yep, exactly the same. Price action is exactly the same across the board. It's exactly the same. The only difference is how much time are you going to spend watching the charts instead of executing on the charts? Two very different things, right? Watching the charts and watch the moves play out, it has a different effect on the mind, because you're essentially saying that, okay, price is going to move and you're not executing. So sometimes, guys tell themselves that, oh, okay, if I'm not executing, I'm not making money, I'm wasting time. No, you're gaining valuable experience. You're gaining very, very valuable experience to be able to execute with confidence the next time it happens. Because the first time you see this happening, you're like, okay. Second time you see this happening, you don't have enough confidence to execute. You execute being afraid a little bit. So once you see things happen over and over and over again, then you're executing confidently, saying that, oh yeah, I've seen this happen multiple times, I'm going to take a trade. If it doesn't go against me, then we can manage risk. And we did manage risk on one of the trades that basically didn't work, I guess. So okay, so let's take a look at this right here. Weekly is still bullish. Let's take a look at some news here. If we have any news, we have no news. Oh, we got ADP for CAD. Okay. Yeah, we got no news. Daily is see, now this daily candle has just moved up in the Asian session. It hasn't really moved down. It hasn't really made that lower wick. Let's take a look on the 4-hour. 4-hour is rejecting this resistance, and we are creating a support, right? If we think that the daily candle is going to move down to make a lower wick, that's going to happen after like 30, 32 pips after, right? So looking on the 4-hour, which means that, okay, since 4-hour has done a rejection, price may move down, right? It may retrace a little bit. We don't know. Let's take a look on the, oh, wow, look at this 1-hour time frame here. 1-hour created resistance. We have a support formed on the 1-hour time frame. So yeah, this basically can mean that there's a probability that price can continue to push down towards this support if this new 1-hour candle breaks the low and continues pushing down in this 27, 28 pip range. Pretty good range. 28 pip range, you can easily get 15 pips out of it, 10, 15 pips out of it. Very easy, very easy. So since price moves a lot, um, may want to do a sell stop, but we'll see. Yeah, see right there, it's breaking the low in the first 2 minutes, 2 seconds. You got the 30-minute here as well. I'm trying to see if where's the stop is going to be. Stop is going to be above this 1 hour candle, which is 30 pips away, and you're looking at 27 pips. Yeah, it's not worth it. It's not worth it. 10, 15 pips are not worth the pips and the drawdown. I mean, okay, now if it breaks the low, then I guess it could make sense because, okay, tell me why it would make sense now. Can someone can someone let me know? If we take a sell now, why would the sell make sense based on the stop loss? Top wick is longer. Liquidity grab, risk reward, and also because the stop loss is going to be above this wick now, right? Now it's smaller. Now it's a smaller stop loss instead of a 30 pip stop loss. Now it's a 15 pip stop loss, and we can aim for easy, like 15, 1 to 1 risk reward here in this 28 to 30 pip range. We can easily get like 15 pips out of it. Easy. Should be a very simple move. As long as it doesn't break its own high, it should be a pretty simple move. So yeah, wow, look at that. We're about 7 pips, 8 pips, 8 pips, 10, 11, 12. Oh, tapped into that. I guess this is where I'm just going to put stops at break even, secure 90%, even if it's not 1 to 1, because we don't want to risk a drawdown here. It's so close, so close, but hey, we're safe, right? Let's see how this candle closes there. Yeah, we're super safe now. Now we're just consolidating here. Just straight consolidation at this point now. This is London Open now. And see at this, so look at the difference between this London Open and the 2 London Opens we've done before, right? The previous ones had clean range to the left hand side. We had picture perfect price action formed for price to move. But this right here, this is not that sort of price action formed, right? So in this case, we stay away from it. We don't trade. We're like, yeah, whatever. We're just gonna move towards the New York session. Like this is just rough. Whatever. Like, look, we're down to support. I don't know what the next candle is gonna do. No idea. Oh, okay. Well, we moved up over here. Yeah, awesome. Good job there. Good job, gold. Great move. Just in a range now. Oh, we moved back up to the top. So let me guess. We're gonna move back to the bottom. Oh yeah, we're just doing ping pong right here. So I think a better idea would be to wait for price to basically break below this area here, break below that support. Oh, we did break below that support. Wow, that was a strong candle to break below that support. So now we need price to do a retracement, create resistance, and then we can take a sell for price to move down. See that 30-minute? Now we're doing some sort of a retracement for price to continue pushing down. Just gotta wait for this 30-minute candle to close. We have to wait for the 30-minute candle to close. It's very, very important. It's absolutely necessary because the next hour is going to be New York Open. It's going to be New York Open hour. So let's see how this candle closes. Oh, we closed bullish, but a small body bullish candle. That's what we closed like. We closed a small body bullish candle, 1 hour candle closed bearish. Now, if the next candle breaks the low right here, especially on a 30-minute, and this is New York Open, then there's a very good probability we can continue pushing down to this wick right here, which is like 25 or 26 pips away, and probably down towards, 1773 here as well. But we need a top wick first. Oh, yeah, look at that. The first minute. The first minute, we're breaking the low, and let's go with a smaller lot size over here. So we can do a sell. Stop is going to be above this candle, like, 14, 15 pips. And we're looking at price to continue pushing down 26 pips over here. Right? We got New York Open, high volume time. We've broken below the lows. We've had some retracement on a 30-minute candle. So there's a very good probability for price to continue to push down. Now, we're going to manage risk. If this candle starts to flip bullish, then we're going to close 50%. Right now, whatever the risk is, I don't know, it's like, what, 15, 16 pips. Monetary terms, I have no idea. Wow, look at that. We're moving down at this point. 8 pips. See, we moved down 8 pips. Now we're retracing. So what are we going to do now? What do we do normally? When we go down 7, 8 pips in profits, and then price starts to go and draw down. What do we do when it comes to risk? Close 50%. Exactly. Close 50%. Because if price starts to go back down again, then we can add that position back. And we've done a webinar on that as well. How to give your trade a second chance. Then we can add that 50% back, right? But for now, we're just being, sensitive to risk. And where are we going to add that back once the 15-minute candle closes? Oh, see that? Now it's turning bullish. So we're going to close another 50% right here. Oh, yeah, we didn't go down. I think I missed it, but when didn't you sell? But what? When didn't you? Why didn't you sell on previous candle when it broke the low? Where? This one? Yeah, you did miss it. Sam, where's the tension, man? Because we wanted to see a retracement, right? Because it broke the low, but we're like, nah, since it broke the low, oh, wife came in the room. So we so we wanted to see some sort of retracement for price to create resistance and then move down. That's what we wanted to see. Because we already broke below right here, so instead of a continuation, we wanted a retracement so we can get a better entry. So then we got this retracement, candle closed like this, so we're like, okay, time to take a sell over here, but now we just managed risk. So this is New York Open now, so let's wait to see how this 30-minute candle closes. Oh, we're closing back up over here. And, oh, wow. We're moving back up over there now. What's going on over here? Let's stay here for a little bit longer now, because this is interesting. If we're trending down and we broke below that low, and we're also breaking below this low now, so maybe this is a resistance formed at this point. So this is just for my own understanding situation here. If we're breaking the low, then there's a higher probability for price to probably continue to push down, maybe. Oh, probably not. Yeah, just range. All right, perfect. So Friday we don't normally do trades, so we're gonna leave that out. So the recording. Oh shit, it wasn't recorded. Oh man, just joking. It was recorded. So the recording is going to be in the database in the next 4 hours. So you're gonna see it there. It's going to be in the simulations session at the very, very end. Um, Hopefully this was some education. We tried to do London sessions, pre-London to pre-New York. The only difference in good trades was that we had clean candles to the left hand side and we had volume in the market. That's it. In this previous scenario, what we saw was prices just ranging, so there was no intersection trade at all. First time here, and this was amazing. Oh, nice, Gregory. Very nice. Well done. London was all the trade. Yeah, man. London has pretty good moves, but New York. I've been testing this one thing too. When London has a lot of great moves, New York normally corrects it. Mustafa here from our group, he basically told me that one day. I'm like, okay, that's interesting. So start to look at that, and it does sometimes correct the move from London. So take care, everyone. Have a great rest. Whoa, it's the weekend. Have a great weekend. We're gonna see you probably on Tuesday or Wednesday. Take care.